This morning, while most of the world was still scrolling half awake through their phones, Bitcoin quietly crossed back above $70,000. And with that single move, it reminded everyone of a hard truth about crypto. It never sleeps, and it never asks for permission. Just weeks ago, fear was everywhere. Billions were wiped out, timelines were full of panic, and analysts were calling the top. Today, the same market is breathing again, and the story behind that recovery is far more intense than a simple price bounce. Bitcoin's return above the $70,000 level didn't come out of nowhere. Over the past several days, buyers stepped in after a brutal February sell-off that pushed prices close to $60,000. On-chain data showed long-term holders refusing to sell, while short-term traders were shaken out. This created the perfect setup for a relief rally. As liquidity returned, Bitcoin climbed steadily, and when it broke that psychological level, sentiment flipped almost instantly. Fear didn't disappear, but confidence crept back in, quietly and cautiously. What makes this move important is not just the number itself, but the timing. Global markets are still nervous, inflation concerns haven't vanished, interest rates remain a question mark, and risk assets are under constant pressure. Yet Bitcoin moved anyway. That tells us something critical. There is still deep conviction underneath the volatility. Institutions may slow down, traders may panic, but the core belief in Bitcoin as a long-term asset hasn't cracked. At the same time, the crypto fear and greed index remains in extreme fear territory. That contrast is powerful. Price is rising, but emotions are still fragile. Historically, that combination has often preceded larger moves, because markets tend to climb when most people are still afraid to trust the rally. It's the kind of environment where smart money accumulates quietly while headlines stay cautious. While Bitcoin was reclaiming ground, the conversation around crypto expanded far beyond charts and candles. On the institutional side, a surprising development came from Trump Media, which filed for new Bitcoin and Ethereum exchange-traded funds. The move added fuel to an already heated debate about the future of crypto in traditional finance. Whether people love or hate the idea, the message is clear. Crypto is no longer operating on the fringe. It's being pulled directly into the heart of mainstream financial products. This matters because ETFs change who can participate. They lower the barrier for investors who don't want to manage wallets or private keys. They bring crypto exposure into retirement accounts and traditional portfolios. Every new filing signals that companies still see long-term demand, even during volatile periods. That's not speculation. That's strategy. Regulation also stepped back into the spotlight today. A White House crypto advisor warned that the window for regulatory clarity is closing fast. According to the advisor, delays are actively hurting innovation and pushing projects offshore. This statement reflects a growing frustration within the industry. Builders want rules, not chaos. Investors want certainty, not guesswork. And governments are realizing that dragging their feet could cost them leadership in a technology that is already reshaping finance. Perhaps one of the most unexpected developments involves XRP. Reports indicate that XRP has been included in a Federal Reserve-related crypto risk framework proposal. While this doesn't mean adoption or endorsement, it is a major signal. It shows that certain digital assets are now part of official risk discussions at the highest financial levels. Just a few years ago, this would have sounded impossible. Today, it's happening quietly, through documents and frameworks rather than hype. And then there's Elon Musk. Once again, he found a way to stir the crypto conversation without making a direct announcement. Updates related to Bitcoin pricing and crypto visibility on X sparked speculation about future integration. Musk has a history of influencing markets with a single comment, but this time, the impact feels more subtle. Instead of hype, it's about infrastructure, visibility, normalization. If crypto data becomes a native part of social platforms, it changes how people interact with markets on a daily basis. All of this is happening while altcoins attempt to follow Bitcoin's lead. Some are recovering faster than others, but none are truly independent of Bitcoin's direction. Dominance remains high, signaling that investors are still prioritizing perceived safety over speculative risk. This is typical after sharp corrections. Capital flows back into the strongest asset first, and only later spreads outward. Zooming out, the broader crypto market cap has started to stabilize. This doesn't mean the danger is gone. Analysts continue to warn about consolidation and possible pullbacks, but stabilization itself is a victory after weeks of relentless selling. Markets don't go straight up or down forever. They breathe, they reset, and they test conviction. Right now, crypto is in that testing phase. What makes today different from previous recoveries is the context. This is not a market driven purely by retail hype. It's shaped by policy discussions, institutional filings, macroeconomic pressure, and long-term positioning. Every move feels heavier, more deliberate. When Bitcoin rises now, it's not just traders reacting, it's systems adjusting. For everyday investors, the message is simple but uncomfortable. Volatility is not a flaw in crypto. It's the cost of being early in a system that is still defining itself. The same forces that cause sudden drops are the ones that create historic gains. The challenge is surviving the fear long enough to benefit from the belief. As Bitcoin holds above 70,000, the question is no longer whether crypto is dead or alive. That debate is over. The real question is who will adapt fast enough to its evolution. Governments are racing to regulate. Companies are racing to package. Platforms are racing to integrate. And investors are racing to understand what this all means before the next major shift. Today's price action, ETF filings, regulatory warnings, and institutional signals all point to one conclusion. Crypto is entering a more mature, more complex phase. It's less about overnight millionaires and more about long-term positioning, less about noise, more about structure. And as the market moves forward, one thing remains constant. Bitcoin doesn't care about fear, politics, or opinions. It moves based on conviction, scarcity, and time. This morning's quiet reclaim of $70,000 wasn't a celebration. It was a reminder. The crypto story is still being written, and the most important chapters are happening right now, in moments that many people are still too afraid to trust.